Hello everyone, this is George DeSantis with the look of the market for the week ending December 11th, 2015. I'd like to start this week by looking at the best choice chart, which shows the volatility of the SPY, the ETF of the S&P 500. We can see that this week we ended up at about 2% on that volatility, those three bands, the top band being 90%, the mid band being the average of 50%, the lower band being 10%. But right now we're at 2%, which in a sense indicates that the market is oversold at this region. As we saw, it was oversold here, it was oversold here, and there were two rallies after that. So we'll wait to see if this oversold condition materializes in a new rally. And we'll take a look at some more charts now to see what we can glean from those. So the next chart we look at is the monthly chart of the S&P 500. First thing we should note here is that the Kalman filter is still below the instantaneous trend line. This yellow line is a Kalman filter. The blue line is the instantaneous trend line. That indicates that the trend is really down. Now, the second thing of importance here is this red bar. We now have a red bar on the monthly chart indicating, according to the impulse system, that we shouldn't be buying the S&P at this point, or the index, So that's not really a pretty picture at all. Also, the parabolic yellow dot remains above the most recent bar, this month's bar. That's also bearish. If we go down to the bottom of the chart, we find that MACD ticked down a bit from a month ago. So this chart is beginning to look pretty bearish, the monthly chart. We'll see how this develops, but for now, let's call it a pretty bearish looking chart, and we'll go take a look at the weekly chart. So this is the weekly chart of the S&P 500. We should note, first of all, that the Kalman filter, since it crossed over the instantaneous trend line, remains above it, although it ticked down last week when we had this very bearish red bar here. Okay, apparently, as we discussed last week, after having these two hanging men, these candlesticks are called hanging men, short arms if you wish, and long body. And I guess it was just too much at 2100, too much resistance at this level, since we bumped up against it 1, 2, 3, 4, 5 times, 6 times for the last 6 weeks. So I guess the hanging man got too exhausted and they let go, and they let go in a big way last week. So we have this big red candle. Although the Kalman filter is above the instantaneous trend line, this doesn't look good. We close below the instantaneous trend line. What we're looking at here is the 1993 support level. As we'll see, that is at the 50% retracement, Fibonacci retracement level on the daily chart. So this is a number to keep in mind, 1993. As of now on the weekly chart, the parabolic is still below the most recent weekly bar. So this has not signaled a reversal in the trend yet. On RSI, we crossed below the 50% line, so that's a bearish signal. And on MACD, just below it, MACD is ticking down now, although it's still positive, in positive territory. It's ticking down last week. And our Williams percent fell below the 80% line. Again, in support of all of this negativity or bearishness. We'll take a look at the daily chart and see what we find there. So here is the daily chart of the S&P 500, one that we've been looking at for some time. First thing we note is that the Kalman filter broke below the instantaneous trend line on Tuesday of last week. Okay. After seeing that, I decided that, as you know, I sent you an email that I'm going to be watching this very carefully. And if it doesn't give us a new high, here, I'll be checking out. I'll be selling everything, which I did, and taking the gains that I had since I bought somewhere in October 5th, somewhere around here. So I had some nice gains in the few stocks that I owned. Now, the Kalman filter is now trending down below the instantaneous trend line, and that's a change in the direction of the trend. Parabolic is now above the most recent price bar, which is signaling a change in the direction of the trend, which is now down. The next support level seems to be at the 50% retracement from this low back in October, or September rather. So there's a 50% retracement level at 1993, which I mentioned earlier. Hopefully this will hold and we will get a rally from here. But even if we rally from here, we ought to keep in mind that until and unless we break above the instantaneous trend line first, and then all of this overhead resistance, we got to be really careful about owning stocks around here. Now, just below the price bars, Jerry Appel's sum of the rate of change indicator turned negative some time ago and is now trending even further down below the 4% line. So there's no buy signal on this. In fact, we should have been selling here earlier. MACD is trending below the zero line, so it's now in bearish territory. And at the bottom of the chart, Williams percent R is now below the 20% line. Something of interest here is that we've noticed that back in September, when we made this low, percent R became very oversold. We got a rally from then. Also, back in, I think it was August, we had another decline in the market and another decline below 20% on Williams percent R. Each of these signaled a bottom. We can only hope that this signals a bottom here too, but we can't be sure about that. We never know where the bottom is, let's face it. So let's take a look at a few other charts. The next chart we're going to look at is that of the impulse indicator from Alex Elder. We can note first of all that, and this chart is taken from sharpcharts.com, stockcharts.com. It's called Sharp Charts. And at the right edge of the chart, you could see that this big red candle on this weekly chart is red again. It was red here, and now it's red again. So according to Alex Elder, when we have a red bar, we are not permitted to buy the market, okay? In this case, the S&P index or the SPY or any other instrument based on the S&P. So MACD, we could see that MACD ticked down here, and at the bottom of the chart, Williams percent R has dropped below the 20% line again. So I just wanted to show this because we should take a look at the impulse bars. We saw this on the monthly chart as well when I showed you my stock charts, my super charts monthly chart earlier. In any case, we should take note of this red candle on the weekly chart of the S&P. So let's summarize a bit what we've seen. We've seen that we have an impulse bar that's red on the monthly chart. According to Alex Elder, it does not allow us to buy the index. Doesn't mean we can't buy an individual stock, but as far as the general market is concerned, we got to be bearish. On the weekly chart, similarly, we saw a red impulse bar. So we ought not to be buying the index either on that weekly chart. Now, as far as the weekly chart is concerned, it is usually considered the strategic decision, the chart on which we make strategic decisions, whether we should be buying or selling the market. So that answers that question. We shouldn't be buying the market. On the daily chart, we have a declining market. It's what we're looking at here now. And we are looking for this daily chart to give us some support at the 1993 level. Should we find support there, we can then begin to think about buying the market again, but not before then. As far as I'm concerned, I think we ought to be looking for support somewhere around the 50% retracement level. And if we see that, then we may start thinking of buying the market again. I think that's it for now. Have a great weekend, and we'll talk to you next week.